Joining me now after downgrading the stock and removing his price target altogether is Oppenheimer's Brian Nagel. Brian, thank you for being here. Why downgrade just to perform? Why not underperform if you're removing the price target with the stock in free fall today?
Well, look, I mean, it's a good question. The point when I've been talking to our clients all day on this, look, Lulu has hit a speed bump, right? There's merchandising issues at the company. I think management is now more aware of this. They're turning more aggressive in their efforts to fix the problem. But this is still Lululemon. I mean, this is a real brand. And you look over any length of time, I think there will be a recovery here. So our message to clients is step to the sidelines now, but very much keep an eye on Lululemon, because we do believe that at some juncture, there will be a forthcoming recovery. And, that could be as early as 2026 when they start to reset this product.
So that was going to be my next question, is what do you think needs to happen to have that recovery in place? One thing that Sarah Eisen asked CEO Calvin McDonald about was the longtime absence of having a creative director in place. Now, Lulu has named Jonathan Chung to that role. Did that set the company back? And now that they have someone who can kind of create that creative vision for the company and make sure that it's appeasing to its brand and all of that, does that help Lulu really turn things around, or does it require more than that?
No, look, I think that's a significant first step. Okay, so to answer your question, in my mind, again, it's easy for an analyst to sit here and say what the problem is, right? I mean, I'm from the cheap seats, if I will. But, I mean, the issue is merchandising. And, I spend a lot of time in Lululemon stores. I know a lot of their customers really well. And the product, as great as it is, has gotten stale. What's interesting, if you look at, how Lululemon's performing right now, international markets continue to perform very well. For instance, China, it's still a relatively new brand. But in these more mature markets like the United States, where Lululemon's been around for a while, their core customer has a collection of product. They need to introduce more new, more innovative product. And that's what's been missing. And I think, look, and this is not, I follow a number of companies within the space, including Nike, Under Armour, and others. This is not unique to Lululemon. There was very much a lack of innovation post-pandemic. These companies, I think they were disrupted. They got in kind of the mode that their products were selling well without innovation, and now the rubber's hitting the road. Okay, but what you need to see from Lululemon is more fresh product, and that will come. It's just going to take time.
Yeah. And then, of course, there's the question of price elasticity given the tariffs and all the competition out there. Can they afford to meaningfully raise prices in this environment? I know Jim Cramer was talking this morning about just competition from Costco, which is tremendous there.
Look, that's a $64,000 question right now, okay? And, just stepping back from Lululemon for a moment, I think one of the reasons the stock is performing as weak as it is the market's basically saying, and I think correctly, that here's a turnaround for all intents and purposes happening in what is becoming an increasingly difficult, precarious, if you will, consumer spending backdrop. And exactly the point you're making, Leslie. I mean, you're seeing a lot of companies, and I think we're early in this, but we're seeing a lot of companies start to raise prices. And I mean, my work and the work my team and I do on the U.S. consumer, what we're basically seeing clearer evidence that as 25 progresses, as we move into the holiday season, there's going to be a lot of companies simultaneously raising prices. And that action, could crowd out discretionary spending. So a company like Lululemon, which is a discretionary product, are already suffering from some internal issues. That's another big pressure point. And they're going to have to really question to what extent they can raise prices, particularly on legacy items. Now, if they start introducing new products, that gives them a little leeway, if you will, to raise prices. But these legacy products could be more difficult.